Hey, welcome everybody. This is Mark Dannenberg. We are here on Wednesday, January 26, 2022 for our every other week Q&A. Thank you for being here. So the purpose of this is to spend time listening to whatever questions you might have so that I can help clarify, provide a little more education, a little more reinforcement. We set aside this time every couple of weeks to make ourselves available so that as you are in your learning process, you have an opportunity to ask questions and we can dig in a little bit more than perhaps we have time for in the live trading room. Or if you're not part of our community yet in the live trading room, and you may just be here listening in to learn a little bit more, also welcome. Thank you for being here. Happy to answer whatever questions you have. In this session, that we always have some time while people are queuing up their questions, and also then maybe between questions. I'm going to just randomly touch on a few things that I think are really important for those of you who are in the live trading room and have been following along with the Aurora system trading. We're going to talk a little bit about trend versus catch signals, considering the recent volatility. There's some really strong trends indicated by the 10-minute, and 50-point profit target is a good goal. That's what we've had out there. But there's also opportunities to hold for the trend. I'm going to show you what I'm talking about, use today as an example. I'm going to touch a little bit on fractals during this extreme volatility. When I say extreme volatility, I mean perhaps market open, or today we had FOMC. And if you look at the chart, starting at 2 o'clock, it's just really kind of insane. It was like a 500-point move from the high after FOMC to the low. So there's opportunities to trade the fractals. What I did is I traded the fractals today around FOMC. I had one set at the upper fractal to go long, and I had one set at the lower fractal to go short. And I was using a 50-point profit target. And they both exceeded the 50 points, so it took me out at 50 points. So it's just another way. I'm saying this as kind of a reminder for those of you who have in the past traded fractals and may now be immersed in trading the Aurora system. I'm not interested personally in taking every fractal on a 3-minute or 5-minute chart throughout the day, but when we are anticipating fairly sizable movements, fairly significant volatility, and we're not really sure which way that may go, fractals can be an excellent way to harness some of that profit. So just I'm putting that out there as a thought, and I'll show you the chart here in just a minute, but putting that out there as a reminder that when you started trading the Aurora system, it doesn't mean that you should completely ignore anything you were doing previously. The Aurora system is a really strong foundation with some pretty amazingly strong history in terms of profit production, but there are other factors that can help you accumulate the profits that you're looking for. And fractals today was a good example, and I'm going to be looking more at those and discussing them more, not necessarily calling them out, not necessarily taking them every single time they present themselves in the live trading room, but around market open that can so frequently have extreme moves in both directions. It may be a consideration using 3-minute and or 5-minute fractals for that. So that's just kind of a food for thought. Think about that and think about it with your personal understanding of fractals, whether or not you would want to incorporate that into your trading. We'll talk a little bit too about profit targets and parameters. In the most recent volatility, and I've said this in the live trading room, I'm kind of discounting last week because there was such an extreme condition last week. There was over 1.1 $2 trillion of options that were expiring on Friday. And it really created a lot of activity and volume in the market that was highly, highly unusual. So I'm kind of setting that aside. But in the volatility that we've been experiencing, what we are seeing in our analysis between Kristen and Aaron and myself is the signals are excellent. The Aurora trading system signals are excellent. They are giving us the right directional bias, not 100% of the time, but really no different than what they've always given us. And where we are seeing a little bit of challenges that the volatility may require adjusting parameters. Now, we had volatility, extreme volatility in the past 18 months as we were doing a lot of validating and testing. And we were doing some other types of adjustments during that volatility period, but it just points to the fact that we might need to consider either adjusting our parameters. And when I say a parameter, that could be the stop that we use, the size of the stop, or it could be the profit target. And just as an example, Aaron was kind enough to go back and do an assessment on the performance of trades that we lost on. And yesterday, for example, and I want to be very clear, very, very clear here. This is recorded, so I want to be very clear. I am not recommending these adjustments right now. I'm just saying we are doing some analysis because we have data and we pride ourselves in making all of our decisions based on analyses. But just as a swag, I took a look after Aaron compiled the data at what would yesterday have been like if we used a 40-point stop, regardless of whether you're using a catch trade or a trend trade. And then on the trend trades, what if we closed out for 30 points? What if we had a 30-point profit target instead of a 50-point? Yesterday, that would have resulted in an additional 126 points. And today, that would have resulted in an additional 88 points. So that's significant to me. And now we're not going to make any rash decisions based on a couple of days. And then we have to think through, well, is 40 points as a stop, which is $800 per contract of risk, is that reasonable for ourselves? And is it reasonable to propose to all of you in our community? So another aspect of that, which I was talking quite a bit about today in the live trading room, is as we're starting to recognize these abrupt reversals in price movement, and the signal that you may be in has given you the right direction and profits, perhaps at least for a temporary period of time, you should consider more often possibly locking in some profits. So we had examples today of trades where the system generated a signal for us. The profit moved to 45 points of profit, and then just following our standard rules and parameters, we ended up closing out the trade for 13.25 point loss. Well, it's not practical to be at 45 points and close out for a loss. So we're having some brief conversations about possibly, especially in this volatile market, how to adjust that. But it doesn't need to be entirely on us. We're going to share with you what we believe and what we are modifying in our own trading. And I would encourage you to think about it. So today, I was encouraging each of you to think about when you had 40 points of profit in a trending trade, or you had 35 points of profit, to choose something that was comfortable for you in terms of locking in. Some of you might lock in 20 points. I know I shared with you on one trend trade that I locked in 20 points. And part of that locking in is going to be based on what your personal goal is. So what's your personal trading plan goal? If your goal is to do 60 points in a day and you can lock in 30 points on one particular trade, that seems to me to be a good stride towards your goal, even though the parameters that we track and have reported to you is based on holding for a 50-point profit target or possibly holding for being closed out or stopped out of that trade. So we're responding to the current market conditions. It's not that we haven't been here before, but we are very cautious, and we learned this in our 18 months of testing. We don't want to start making decisions based on 1 or 2 days. So what you're going to hear me talk about more in the live trading room as this volatility ensues is the system is holding for 50 points, but we're at, I may say to you, we're at 35 points, and on my own dome, I've locked in 30, or I've locked in 25, or I've locked in 20 points. We're going to share more of that with you. And if that helps you to take some guidance from that, awesome. If you want to make your own choices on that, certainly you can do the same. Now, you don't need to ask me if I'm locking in. I will let you know if I'm locking in on something. So today was a day that ended up being, I believe, unnecessarily negative in terms of our overall progress, our overall profit production, because we had trades. We had one, I'm just looking at my tracker here. 1, 2, 3. We had 3 trades that were over 30 points that we ended up taking far less than that. Like we ended up taking 10 points or 12 points or a loss of 13 points. So it's just, there's a very practical side of this. You build and trust and trade a system, and it's providing directional bias, but there's 2 components to what Aurora is presenting to you. One is the signal itself that is suggesting that the market has a bias to move higher or lower. And I still see that it is very spot on. It's just very strong in predicting the directional bias. But the other part of this equation is what we have identified as a reasonable set of parameters. That reasonable set of parameters may need some modification. And while we're in a period, a zone of perhaps we need to modify the parameters a little bit, you might want to lock in some good profits for yourself. You get to 45 points of profit and you're waiting for another 5 points. I personally would be locking in 30 points. I'm going to give it a wide berth, let it go to 50, but I'm happy taking 30, even if it ends up going to 50 afterwards, and leaving some on the table. So today, as I started to say, we ended up with a negative day. It wasn't a big negative day. In fact, a big portion of it, a portion of it was leading up to FOMC. There was some pretty hostile activity leading right up to FOMC. So although the system, given our parameters and reporting our parameters, finished down 43 3/4 points, I finished up 88 points because I was trading mostly the trending trades today, and I was willing to lock in, as I shared with you. And I shared with you on a couple of trades specifically where I had locked in, and I was sharing some thoughts with you to think about. Perhaps you might want to consider locking in. Don't let this come back and take you out for a loss. And then that was before FOMC at 2 o'clock, and then ended up with 100 points on 2 fractal trades. So this is about understanding your tools, understanding your system, and finding the most effective way to leverage the profit that you desire, which has been determined from your personal trading plan, from the systems that are available to you. And then the last thing, which we may talk about as we get into some of the questions that you have, is I strongly encourage you, once you've gotten comfortable with the Aurora system, to consider diversifying. Pick another futures if you only want to stay with futures. Pick a couple of stocks or indexes or ETFs and dig into trading options on them. The system works extremely well no matter what you're trading. What we are trading is the NASDAQ 100, and it is very susceptible to economic news. It's very susceptible to big movements that other futures are not as susceptible to from that same news. So it's a little bit about diversifying where your focused attention is. So those are the things that we may touch on here a little bit tonight. I'm going to, before I get to Q&A here, which I will in just a couple of moments, I'm just going to show you a chart here real quick. 2 o'clock, 2 o'clock today. So there were a bunch of 50-point bars after 2 o'clock on the 3-minute chart. And there was this little pop-up. Let's see if I can, there we go. There was this little pop-up, a little easier to see on the 10-minute chart. Right at 2 o'clock, there's a little pop-up, bar opened at 478, went up to 639, little pop-up. So the high was 639. And then the low post FOMC went from 639 down to almost 700 points, went down to 13,976. So I'm generously rounding, but like 650 points, 660 points, that sell-off. So the opportunity was look at the fractals leading into 2 o'clock. They were narrowly congesting themselves into this range leading into 2 o'clock, and trade the lower fractal, trade the upper fractal, and you can see why they both worked out so well, 50 points on each. So that's just another tool in our tool set, but lots of 50-point bars around that 2 o'clock activity. That's unusual activity that does not present itself throughout the day, every day, unless we're having some sort of extreme news or some other factor like last week where all of the stock options were expiring at the same time. So it was kind of a wild ride, but if you don't look at it emotionally and you keep your wits about you, those fractals played out nicely in an extreme move. I'm gonna ask you guys a question. It's entirely up to you whether or not you want to respond. I just sent you a poll. I'm just curious how you're feeling about your own application of the Aurora system. So while that is out there, Kevin says at 240 there was a 200-point plus trend trade. Yes, we saw that, Kevin. Greg is asking when we announce the options alert service. So I've been talking about getting an alert service set up so that we can actually invest the time in looking for good options trades on our watch list of stocks, and then sending out an alert to you with information about what we are trading. And Greg's asking, are we just going to communicate the entries, or are we going to detail the exits? So we're going to place in the alert what our planned exit is. And if that changes, we would send out an alert saying we've adjusted and we're out of the trade. Now, most of our trades are going to be making use of a good till canceled order to close. So we don't want to make this complicated. We don't want to be communicating with you, 5 times on one trade. In a perfect world, we'd send out a trade and say, hey, we buy to open a call on Amazon. Here's the strike, here's the expiration, and here's what we paid. And our GTC is set at X, whatever that might be. So you can decide if you want to use a smaller or bigger good till canceled order, but we're going to communicate with you what it is that we have placed in our own account. So we have somebody that I'm speaking with who is most likely going to be coming on board to manage that process for us, manage the alert service. He has extensive experience in trading options and futures. So he's going to be a great addition to the team, and I think you will uh, be able to take full advantage of his knowledge of trading options, as well as taking the signals off of the Aurora system. And most of those signals are going to be based on what I've shared with you in the live trading room, the alignment between a 30-minute chart and a 5-minute chart. So as long as we have alignment, we would go long by a call or go short by buying to open a put. If we don't have alignment, we're not in the trade. And we don't need to jump in on everything. We don't need to be overly anxious on taking a trade, because we've got Amazon, Tesla, maybe S&P 500, that's 3, Bookings is 4, Google is 5, Netflix is 6, Shopify is 7. That's really the core. And we may throw Russell 2000 in there. So we'll have 6 to 8 stocks in our watch list. That's plenty for us to keep an eye on and pick and choose where we want to take a trade. We do not intend in the alert service to send an alert for every single trade that presents itself. The objective of the alert service is going to be to generate what we consider to be a healthy and reasonable income for each of you who participate. And hopefully, for most of you, it's going to be in addition to what you're already generating from your futures trading. Yeah, Rob is just kind of reinforcing what I'm saying, is that we're looking at not necessarily changing our rules, but perhaps integrating a slight modification in terms of locking in just to secure profits. But that is not as much about what we are choosing to do as it is about opening your eyes to what you should think about doing. And so someone in this room may have a personal trading plan goal of 40 points. Well, you might actually be able to knock that out, 30 of that, 35 or 40 of that in a single trend trade. Or you might have taken 2 catch trades and have 10 or have 20 points of profit, and you're only looking for another 20, and all of a sudden this trend trade gives you an opportunity to lock in 20. You've met and satisfied your desired profit level for the day. Someone else in this room might have a 120 point profit target. So the way they think about it might be a little bit different. So it's a very individual decision in terms of how you want to lock in. If you want to ask me in the room, what you might do relative to your personal goal, as much as I have the capacity, I'm happy to respond to that. I will tell you what I'm thinking about in terms of locking in, like I was doing today. And if I'm in a trade, and I really only took trending trades today, I only did 7 trades today, and not counting the 2 fractal trades after 2 o'clock. If I'm in the trade, I certainly will tell you what I'm deciding to do. Wayne's saying, how about scaling out or scaling in? You're talking about trading multiple contracts, Wayne. We have a lot of people in the community who, first of all, may have just made a transition from sim to live money and are not trading more than a single contract. Scaling in and scaling out, if you're trading multiple contracts, makes perfect sense. If you're trading, say, 4 contracts and you get to 20 points, you want to close 2, and you get to 30 points, you want to close another one, and hold 1 contract with no risk of loss for 50, that kind of makes sense too. And I'm sure we'll be getting into more of those types of discussions as we become aware that more and more people are following their personal trading plan and growing the number of contracts that they're trading. So Greg is asking, how did I decide not to trade the PB3s and PB35s? The last couple of days on the catch trades, they've been a wash or slightly slightly favorable, slightly unfavorable. And part of it, Greg, had nothing to do with an observation of catch versus trend performance. Some of it for me has to do with I take seriously a commitment to each of you to be available in the live trading room. And it's easier for me, frankly, to trade only trending trades and not be preoccupied with trades myself when I'm hosting the live trading room. Kristen does a great job of calling out the signals, identifying those, keeping tracking and everything. And we kind of go back and forth and on who's trading our account. But that's what it was. And after the fact, I was realizing that the catch trades in this market are just okay. I mean, they're not killing us. They're also not hugely helping us, but we're getting those catch trades where we get stopped out. 20 points is really nothing in the type of volatility we're seeing, but that's been our traditional stop. So I don't see anything yet that would tell me that we really need to change our rules. I'm just saying we're going to protect ourselves a little bit. This is just an adjustment to, real action trading. We've made those adjustments before, and I think it's appropriate to be sharing with you things that you should be thinking about. So Andrew is asking, can you please explain how to create an option spread that essentially locks in a profit of a call or a put option that you can sell the next day to avoid day trading? So Andrew, I need to assume, first of all, that you have a pretty basic understanding of options. So I'm going to just say, here's a hypothetical, okay? And let's just say you were trading Amazon. Actually, let's look at the S&P 500. All right, so the S&P 500 is trading around 43.50. Let's just round off. So let's say you bought to open a call option with a 43.50 strike. So 43.50 is your strike. And now you realize that the option has reached the profit point that you desire. What you would do if you don't want to close the trade because you're trying to avoid pattern day trading, you are long the 43.50 strike, you would sell to open because you bought to open the 43.50. You would sell to open the 43.55 strike, or maybe it's the 43.60, whichever is the next higher strike. So let's say that's the 43.55. While the value of the 43.50 was increasing, so was the value of the 43.55. And so you get to a point where you're actually, in most cases, selling to open the 43.55 in this example for more than you paid for the 43.50. So now you have a spread that not only you cannot possibly lose on, but for all practical purposes, it has locked in the majority of the profit that you had derived from the original call. And then you wait the next day and you close the spread. Now, sometimes there's a little slippage on the spread when you close it the next day, but if you're working to try to avoid the pattern day trading rule, it's a very effective way for you to lock in the majority of the profit. And in some cases, if the next morning you see a continuation to the upside, because this is a call spread, the value of the spread may actually increase for you. So it's not really complicated to do, but you've got to go through a few to really understand it. The next time you trade a call or a put, consider selling to open the next strike out of the money. With a call, it would be the next higher strike. With a put, it would be the next lower strike. You're creating a debit spread, but it has no debit to it. It actually has a credit to it. And the following day, you're closing it for the value of that credit. So Kevin D, what you're working on is you need a little help in understanding, identifying the subtleties in the trades like the PV35. Maybe you could expand on that a little bit. Let me see if we have time to look at a chart on that here. Let me make sure that I've covered the other questions, Kevin. Michael C is asking, my question is about gaps. On a PB35, we enter the open of either a 3 or 5 minute bar. That is correct, Michael. Does that mean that there needs to be a gap prior to the bar in the chart that actually triggers the trade, but no gap is required on the other chart? Let me go to a chart here. So let me see if I can actually find a quick example. Okay, so right here, Michael, you actually have a PB35 because you have alignment between the 3 minute PBA and the 5 minute CXA. Then we have a blank, which I think you're referring to this as the gap. And then we have another alignment, and that's a valid PB35 because we still have CXA on the 5 minute. And we've now reprinted a short 3 minute PBA, and there was a gap in the 3 minute print between the last time we took a PB35 signal and now this signal. Now let's just say hypothetically we get out of that trade. Well, actually you can see we got out of that trade for our 10 points of profit on that bar. The next bar still has alignment and you're not in a trade, but that's not a valid signal because there was no break, there was no gap in the 3 minute print. There does not need to be a break in the 5 minute. It's almost always driven by that break in the 3 minute to represent another PB35 signal. The next trade you'd get into would be a PB3 because you've got a short 3 minute and you have no conflict on the 5 minute. So let me just see if I can find another example of that during regular market and before all that 2 o'clock chaos ensued. Okay, so here's a PB35 right here because you have alignment between the 3 minute PBA and the 5 minute CXA. And there was a profit on that bar. So you're out. The next bar opens, you're flat. You don't have anything in play. But it's not a valid PB35 and it's not a valid PB3 because between the time you took your last trade and exited for a profit or loss, you need to have a gap in the 3 minute print to take the next trade. So the next entry actually would be right here at 11:24. You've got a 3 minute gap and you're still aligned with the 5 minute CXA. Those are 2 really great examples. And maybe that helps your question that you were asking, Kevin. Okay. Barquette is saying on the Qs, QQQ, I've been buying 360 March out when there's no profit. I sell the 359 put. Next morning, I buy back the short or sell the spread Yes, that's exactly what you should be doing. That's the whole strategy right there, Buckhead, of buying to open your put or buying to open your call. And when you are ready to lock in profit and you choose not to just sell to close, then you instead sell to open the adjacent strike. Michael C. is asking, can a big change in the volatility affect the overnight lock-in of profit? I'm not sure what you mean by overnight, Michael, since we're not trading overnight, so I'm not clear. I'm not clear on what you're asking for there. Yeah, definitely, Kevin. And repetition is the key. I'm going to say this though, I might be biased because I've spent a lot of time in working with and developing the system, but I think when it really boils down to it, the alignment of the signals is very simple. Once the light bulb goes off and you understand it, it's really pretty simple to recognize. And I hope that this example I just gave Michael clarifies some of that. If you have a PB3 with no conflict on the 5-minute CXA, you have a PB3 signal. If you have a PBA on the 3-minute and you have alignment on the 5-minute CXA, that's a PB35. Once you've gotten in and then out of a catch trade, you need a break in the print of the 3-minute before we would consider another catch trade as valid. Now, does it have to be exactly that way? Well, no. I mean, you can now look in hindsight that you could have taken a trade on every one of these 3-minute bars and done quite well. But that's over trading. And we were actually doing that in the very, very early parts of our testing. You just don't need that many trades. Generally, if you've had a nice move to the upside or downside, whichever direction you're trading, it's that gap that is telling you there's a pause here. And if it represents itself, if the underlying algorithms reinterpret that there is an upward bias in this case, it's going to present another signal. So that's why we use that gap. That's why we focus on that.
Mark, Michael's question regarding the volatility affecting overnight lock-in was regards to options to avoid day trading when you're locking in.
Oh, I understand now. Thank you. So, so if you sell to open against the call or put that you've bought to open, overnight change of volatility, yes, can change that. But what you've really locked in is generally the value of the spread or more than the value of the spread. So if the option that you bought to open is affected by overnight volatility, the option that you sold to open is also affected by overnight volatility. And one is helping you and one is hurting you. And generally it's going to, in that single overnight, it's generally going to net out to being neutral to the way it was when you locked it in, or possibly slightly favorable or slightly unfavorable. Remember, your purpose is to take the trades, lock in the profits, and avoid a pattern day trader situation. That's your purpose. So if I bought to open an option and I sold to open an adjacent option for, say, 10 points more than what I bought to open for, I've got $10 of profit locked in. If I suffer from some more extreme volatility shift overnight, and I can only close that spread the next day for a total of $8 of profit, I still won. I still won big. I accomplished exactly what I wanted to. I wanted to lock in profits. I wanted to avoid pattern day trading. Fergal's asking a question about signing up for Aurora. Will you be able to enroll at any time? Fergal, the invitation to enroll is open right now. We don't have any plans on closing that invitation. So if you have some plans on doing it, in the next couple of weeks, I see no reason why it won't be there. Okay, Michael C is asking, what if you had a gap in the 5-minute and the 3-minute was aligned but no gap? We're generally looking for our gap in the 3-minute, Michael. Use a gap in the 3-minute as your guide. Kevin, I'm going to finish some other questions here. You've given me a few things you want to look at. I will see if we have time to go back to this morning and try to dig into the details of that trade. It takes a little bit to scroll back to the alerts log, but I'll do my best here after we finish some of these other questions. Joe is asking, on a follow-up to the PP35 signal, is it okay to enter the trade if the 3-minute flash is off and back on within the 3 minutes? Does a break include a flash and then back on? No. You want to see the break. So you want to know that there is a break as the next signal is approaching. If there's a blank space here and the next signal is approaching, you just want to know that there is that blank before the next signal comes on. It's not it goes off mid-bar and comes back on that same bar. That, first of all, that's way too much to try to keep track of. I sometimes, if I'm laser focused on the chart, I'll notice that a signal is flashed on and off, but that's not what I'm looking for. I'm looking for the open of a bar to trigger my action, the open of a bar to trigger my action. And that action is going to be based on our rule set of PBA on the 3-minute with no conflict on the 5-minute CXA, or PBA on the 3-minute with alignment on the 5-minute CXA. Jim is asking, is the PBA CXA same as profit flow oscillator and trend consensus indicator? No, these are advanced signals that we have created using a unique set of underlying indicators. When we initially created the profit flow oscillator, which I still like to have on my chart, it was based on a very sound set of underlying indicators. Each of these represent a variety of signals and metrics in the market, but it's not the same. And the trend bias indicator is an entirely separate signal. All of those are contained right here within the Aurora system. So if there was something that you were doing using a particular signal that was part of AES or part of the profit flow analytics, they're still available to you here. Okay. So Kevin, you wanted to take a look at 750 trend trade from this morning. Let me see what I can do here. What specifically did you want to look at, Kevin, on that? $750 was a valid trend trade. So let me get to the there we go. $750 was a short trade. And on the 5-minute, sorry, on the 3-minute, the short came on at 748. Are you looking in your alert log? So I know you missed it, but what exactly would you like to see on this trade? You just want to relook at the trade? So PBA was short at 745. It doesn't show that way right now, but at 745, PBA on the 3-minute was short. On the 10-minute at 750, sorry, scrolling back here, 750, 10-minute was short. So at 745, PBA came on short. The next alignment indication was at 750 when the PBA came on short on the 10-minute. So as of 750, you have alignment. $7.45 was a short PB3 because there was no alignment on the PB13. There's no alignment with the 10-minute. And 7.18, which you're asking about, was a PB35. $7.18 was a short PB35. And there you go. At 7.18, the 3-minute came on and there was full alignment with the 5-minute CXA. So in this case, this should have been an easy one to identify because you already had multiple bars confirming that CXA was short on the 5-minute. You had previously had a signal at 7 o'clock that was short PB35. Sorry, 7:03 was PB35, and that had the alignment. So now here's the break. You took a profit of 10 points on that 7:03 trade. Now here's the break, and the CXA 5-minute is still printing. You can see that. And so when the 7.18 bar presented itself, that was a new opportunity to get into a PB35. It's always easier to identify in hindsight, Kevin. But if you are in the midst of having maybe just closed a trade or you've distracted your attention away from the chart, it's understandable. We miss trades, every once in a while. Kristen will say, hey folks, I just missed that one. I was looking at something else. So we're not infallible, and we're certainly going to tell you if we miss something. For the purposes of our tracker, because the tracker that we're recording in has the intended purpose of keeping track of what the system produced. Whether we choose to step outside of the system or stay 100% in sync with the system is entirely up to us as individual traders. Let's see here. I had a couple other things I just wanted to share with you here real quick. There were a couple trades I said in the room this morning because of where I was on Live Dome that we would not take. We recorded them, but we didn't take them. And a couple of them I missed out on. A couple of them I'm glad I didn't take, but those were my discretion. And I'm going to say this again, I'm probably repeating it way more than you want to hear, but it's my grocery store analogy. I do not need, nor do I necessarily want every single signal that presents itself. This is a system, much like a grocery store, where you can go into the store and pick and choose what you really need. But there's thousands and thousands of products in that store. You're not going to try to grab every single product. In the Aurora system, it is designed to offer you an opportunity to choose how to best extract from the system what you desire for your intended income. And your intended income should be based on the personal trading plan. So I made a decision, I'm going to take a pass on a few trades. And if I miss out on something that moved nicely, that's just the decision that I made. So at one point, I was sharing with you that we had taken some action, we'd locked in, and that we were now favorable to the system. I love this system. I don't need to trade every single trade in lockstep with the system. If I took my profit that's moving me closer to my desired income goal, I'm satisfied. If at the end of the day the system says it produced 150 points and I ended up with 100, 120 points, I'm a happy camper because that meets my goal. If the system lost, like it did today, but it presented all these very precise signals, and the gap between my performance and the system today was simply I took the signals, but I locked in or I made an adjustment and didn't just hold blindly for the 50-point parameter or the 30-point stop out on trends trades. I'm a happy camper. I'm mostly looking for the system to tell me when should I be long and when should I be short. And those of you who have access to the chart, your own subscription, just go through the signals and see how that correlates. I actually love doing it on our watch list of stocks. You can see the number of times that there's and I'm not even looking at the alignment right now. The alignment is just to make it a little bit more precise. Just scroll through here and go, okay, well, here's a 30-minute signal to go short, and look what happened after that. We might have stopped our way, taken ourselves out of the trade, taken a profit here at a break. Well, here's another signal to go short, and look what happened after that. Here's a signal to go long, and look what happened after that. Here's a signal that said to go short. A little bit of movement, a little bit of uncertainty there, and then here's a signal to go long, and boom, look what happens to the upside. Here's a signal to go short. Look what happens to the downside. So it's obvious to me, but I've been looking at this for 18 months and I designed a lot of it. It's obvious to me that the signals identify the directional bias. The intricate part of presenting this to you and you trading it also is now thinking through what's the best alignment configuration. We have a 10-3-minute alignment. We have a 3-5-minute alignment. We have a 3 with no exception, no contradiction with a 5-minute. That's what we've designed. Could we just trade the signals by themselves with no alignment? Absolutely. We found that it was a little bit more reliable if we had some alignment. So there's all sorts of different ways to slice the system. Can we be trading a 30-minute, 5 minutes? Yes, we found that that's most effective on stocks and options. Can we be trading 5-minute with 3-minute? There's all sorts of different configurations here. What I hope to do, and I hope every one of you is on board with this, is I want to teach you the basics of Aurora. I want you to get so comfortable with Aurora that you understand how it works. And now you adapt it for yourself. Those of you who are in the live trading room, you hear several people in the room who will share with us how they have added some of their own biases to Aurora. And one gentleman, Lyle, he'll say to me, gosh, I've got a couple of things I'm looking at, and when I add Aurora to that, it's just like a gold mine. And so he was sharing today, he was up 1,400, then he was up 1,700, then he was up 1,900. Don't let those comments discourage you if you're in your learning phase. Let those comments help you realize I need to pay attention. If I'm really serious about wanting to make this work for myself, I need to pay attention to the best and most effective way to do that. And initially, it's following a set of pretty hard and firm parameters. But a parameter that says I'm holding for 50 points and I decide to lock in 30, that's not a violation of a rule, in my opinion. That's just saying I'm taking 30 because I'm happy with 30. A parameter that says hold for a 20-point stop, but I'm not comfortable, so I'm only going to use a 5-point stop, you're going to blow yourself out of the account. It's not going to work. So we're sharing a lot of information. And I hope we're not sharing more than you need or want, but in the live trading room, I'm going to continue to share with you thoughts about what to consider on this particular trade. And after a while, it's going to become second nature to you. Michael's saying another gap question this time, PB13, since either the 10 or 3 can trigger the trade. The triggering chart that need a gap prior to the trading. 3-minute is your gap focus, Michael. 3-minute is your gap focus. 3-minute will frequently represent a trade to get back into a trend. But the gap that we're focused on, the gap that we talk about, is on the 3-minute. So Ken is saying that his experience has not been positive when he tries to pick and choose which trades to take. So I'm not in general really suggesting that, and I apologize if that's the way my comments came across, Ken. I'm saying think about your personal goal. I'm not telling you, I'm not suggesting to you that you just apply your own bias, which is frequently, with most traders, based on emotion, to every single trade and say, well, I'm not going to take that one, but I'll take that one. I'm saying trade the system. And when you start to generate some momentum in your profits, as I did today, there was one point I was up 60 points today. And I just decided, you know, if that's where I ended the day, I'd be fine with that. And so there was a trade that was being presented to go long after the trend had already moved up like 130 points. And I just decided to filter out that trade. And to be honest, I don't really remember sitting here right now whether that worked or not, but whether the trade worked out or not. But that was my personal bias. And I look at that a little differently, Ken, than just cherry picking the trades that I think are going to work. That was more about, I don't really need more today. We started out negative today, and I don't really need more, although I haven't hit my goal. I wanted something that would present itself as perhaps a fresh trend, a fresh signal, where I wasn't in what we frequently refer to as the exhaustion phase of a trend. So I believe you are correct, Ken, that it's difficult to prosper if you're cherry picking trades. I don't describe what I was doing as cherry picking. I describe it more as profit protection and risk mitigation. But mine is always based on, I know exactly where I am on my personal trading plan. I know exactly what I want to accomplish. And if I'm at the halfway point towards my goal, I might be a little bit more selective and only take kind of a new trending opportunity that presents itself. I hope that makes it a little clearer for you. Okay, SAD is saying, let's say if someone wants to reach 80 points as a target per day in the personal trading plan. what should be the max loss per day in order to decide not to trade when he reaches that max loss? I don't change my max loss, Sad. The max loss that we have discussed and shared is 85 points. I'll periodically have someone in the room ask, well, what does it look like if it was 60 points? And I'm happy to show that. But my max loss is pretty much hard coded at 85. And 85 is not a hard stop for you. 85 is a decision point. If I get to down 85 points, I'm going to take a step back and say, how did we get there? What was it that contributed to that? Was 50 of it one particular signal that was a double that I got stopped out on both parts of the trade? I'm going to give some thought to what I want to do. And the majority of the time, I'll just stop. That's majority of the time my decision. I've had a couple of days recently where we're really pretty much close to or at that target. And I said, no, we're going to keep trading because I see this a little differently. And it ended up being the right choice at that time. Now, if I had made that choice and we continued to accumulate losses, then I might let it go another 20 or 30 points and then say, okay, I was wrong. We should have stopped at 85 and now I'm done. So I'm not looking for 85 to be an absolute hard stop. I'm looking at to be a point in time to pause and reflect and think about what's the day, how's the day been, and what do I want to do? If I was unfortunate enough to hit 85 very early in the morning, and I know I've got the entirety of the day in front of me, I'm most likely going to continue to trade. And if I continue to accumulate losses, then I stop. But if I've got the entirety of the day in front of me, I've had days where I've been, at an unfavorable number, maybe 50, 60, 70 points, and then finish up 200 plus points at the end of the day. In those days where we're down big early, it's usually influenced by something that is a little bit more unusual in the market, not what we describe as a normal market. Now, that said, we should come to the market every day and want what the market wants. We shouldn't fight the market. We shouldn't complain about the market. We should just be wise enough to say, I'm either going to step away from the market today because it's being very difficult, or I'm going to lock in earlier than 50 points because I'm not seeing the full follow through to 50. It's those types of things. Or I'm not going to take doubles because I don't want to run the risk of losing on two parts of the same signal. It's those types of adjustments that I might make as we adjust, as we adapt ourselves to what the market wants. Jim is asking, is there a trading room to trade options on stocks only and not futures? Jim, we only have one live trading room. We are currently calling out signals on NASDAQ 100 futures, and that's mostly for ongoing training. But we're happy to pull up any stock chart and evaluate any option that you might be considering, especially when we get into our alert service, which we plan on releasing here in the next few weeks. So the alert service is going to be all focused on options. Aaron, did you respond to Samir?
No, I will.
Thank you. Okay, I'm just going to, I don't see any other questions. I'm just going to close out and give you a little bit of information here. For our trading system, the current system performance on NQ futures from 7 to 2 is averaging $2,749 per day. That's coming down a little bit from where we were at 3,100 a day because of what we've been discussing here. The 8-to-2 performance is averaging 2410 per day. And I'm sharing this with you because it's very easy to get put on blinders and see what's happened, on a day that didn't work out or a couple of days that didn't work out. And if you're looking at everything through a microscope and not big picture, then it can be a little discouraging. So I like to monitor exactly where we are in terms of averages. Averages to me say there are days that are worse than that, and there are days that are better than that. We've had huge winning days, and we've had limited losing days because we cap our loss at somewhere around 85 points typically. So it's not this open-ended loss, but it is and can be an open-ended win. And as we apply PATs, which those of you who attended the training learned in session 5, it just adds more opportunity to trading the system. Anthony's asking, any thought on opening the live trading room at 7 instead of 8? No, between 7 and 8, Chris and I are working on some things, and the purpose of the live trading room isn't to identify every signal for you. The purpose of the live trading room is to identify signals to the extent that it helps reinforce your recognition of the signals and your comfort level with trading. Okay, and then, sorry I had some numbers on here, but let me pull this up here. So I keep referring to the personal trading plan. It is the core of what we should be focused on. It is core of what we are focused on. And I'm going to say this, I'm being cavalier about this, but I almost don't care what the Aurora system does. End of day performance. As long as the Aurora system throughout the day is giving me signals that I trust, that I can harvest profits out of, even if I decide I'm going to lock in 30 points and it ultimately runs to 50, or I lock in 30 and it goes back to 10 points profit, it doesn't matter to me. I'm looking for the Aurora system, the complexities within the system to tell me when to be long and when to be short. My objective is not to hold for 50 points on a trend trade. My objective is to harvest the profits that I'm looking for. So I changed this a little bit tonight, and I'm going to show you why here. My actual since January 3rd average profit performance is 86.5 points. That's my actual. That's not the system. System's higher than that. My actual is 86.5 points. My actual losing averages is minus 67.21. The system is actually averaging minus 37.3, and the winning day average is 206 points. Okay, I don't need 206 points. Would I like it? As long as it is obtainable using a tool concept like PATS, great. I started the year by having a profit target of 120 points. That's 2,400 a day. Very well within reason to where our averages are. 120 is only 58% of the actual winning day average. But today, for the purposes of this Q&A, I reduced my profitable day target and increased my losing day target to align perfectly with what my average run rate is. my profit run rate and my loss run rate since January 3rd. And I actually love this because last week was such chaos and so unusual. So, out of the realm of what we've seen before with, over $1 trillion of options expiring on Friday. So I plug that in. And as long as I'm willing to trade up to 10 contracts, it gives me a $2.4 million forecast by the end of 2022. What if I don't feel comfortable? And I might not feel comfortable in the level of volatility we have, scaling up to 10 contracts when that would be required. What if I only scale up to 5 contracts? It's $1.2 million. Remember, we started with $5,000 in the account. What if I only scaled up to 3 contracts? Or what if I was only at some point willing to add one more contract to what I'm currently trading? It's over $500,000 having started with $5,000 in the account. So it's too early in the year for me to make those types of choices. It's actually, in my opinion, too early in the year for me to start forecasting the current run rate. So I'm putting my values back at what I had originally set it at, which is 120, and then minus 37.33 on the losing days. That's a $4 million forecast. Well, somewhere between $500,000 and $4 million, depending on what variables I want to use, is a pretty good forecast. And after I get through 3 months of this year, then I will most likely start using, for the balance of the year, the actual run rates. But right now I'm in kind of a learning phase as to where I'm locking in profits and what kind of profits I'm taking on a daily basis. But, in the first 3, it's actually 17 days, I think. In the first 17 days, we're up $20,090, having started with $5,000. Even though we've gone through some pretty unnerving chaos and volatility, but I'm pretty delighted with that. Jim is asking, is there also a way to just buy the indicators only without access to the chat room? Yeah, here's the thing. If you have an Aurora trading system subscription, the live trading room is available to you anytime you may need or want it. But certainly no requirement that you join, and there's no extra charge to participate in the live trading room. Right. I think we are coming to a conclusion here. I just want to make sure that I didn't commit to covering something that talked about volatility. Oh, I just want to show one last thing here on the trends. You're going to have to take my word for this, because I want to show it on a bigger view. At 11:10 this morning, there was a signal that came on the 10-minute chart. And at 11:12, we had alignment on the 3-minute. So this trade actually produced, I'm gonna widen this up. This trade gave you 50 points of profit. Nice, simple, easy trade. We're seeing some pretty strong trends. And one of the interesting things, one of the opportunities that you as a trader could take advantage of is having a more open-ended profit target instead of 50 points. So I want to show you 2 trades. And this, again, I want to be very careful not to imply that we're all of a sudden changing something. But if we were to be looking at something like this, Kristen and I, during the day on a particular trade, I will share it with you. But it's a little easier to explain here outside of market conditions. So the what if is if you got in at 11:12 and you held as long as the 10-minute, I don't care about the 3-minute now that I'm in, as long as the 10-minute continues to present a pattern of long, and you actually use the same philosophy we use of a 5-minute, the low of a 5-minute bar, you apply that to a 10-minute. Well, so here you could have had 50 points, or if you kept adjusting your stop to the low of the 10-minute bar, you ended up with 16 3/4 points. Okay. The next trade was actually at 12:03. There was alignment between the 10-minute and the 3-minute. There was a break in the 3-minute at 12:03. So if I go to, oops, moved all the way back. There we go. So if I go to 12, you can see here that there was a break leading up to it, and that the 12:03 bar reconfirmed the entry. So let's go back to just the 10-minute. So we're in at 12:03. And that hit another 50 points. So you've got 2 back-to-back trades for 100 points just trading the trend. But the alternative here, which I used on the first trade, which was an unfavorable outcome of only 16 points instead of 50, in this trade, if you use the lows of the prior 10-minute bars, you finally get stopped out here on the 1250 bar, and that ends up being a 79.5 point profit. So you combine the two of those together using the lows of the prior bars, you end up with 96.25 points. Or you just simply leave your profit target at 50 points and you end up with 100 points on those two trades. So what we're looking at in terms of volatility is, does it make sense on some of the trending trades to use the low of the prior 10-minute bar, since the 10-minute trend is what we're really following, instead of the low of the 5-minute bar? So that's food for thought, something that we'll talk more about in the live trading room. Ken's asking, is there going to be an additional charge for the options alerts? Yes, that's an entirely separate service from having access to the Aurora system. We will be doing the work to identify the trades there, and it's ideal for someone who doesn't have time to do that or doesn't want to look at the charts. So yes, it's a additional service, additional charge. Yes, sad if we say we're up 40 points, that means that that's our net of all of the trades that we've taken starting at 7 o'clock in the morning. All right, folks, Aaron had to step away. I don't see any other new questions out here. So I think we'll go ahead and close out. I appreciate all of you being here. If you are looking for any more information, oh, that was a build, sorry. Starting balance of 5,000, we're up 15,090 in the first 17 days. If you're looking for any information, you can go to newcycletrading.com/Aurora. There's tons of information out there. There's educational information out there. We've designed this to help you as much as we believe is reasonably possible. So I appreciate those of you who shared with me your comfort level with Aurora. And we've still got a few people who are not yet trading or following the signals. And some folks who, about 22% of people who filled it out are still working to understand the rules. And we've got a nice group of people who are very comfortable with the signals. So that will continue to change for each of you. Okay, have a great night, everybody. The recording of this Q&A will be sent out tomorrow. Thanks.